In 2023, there were 23 members of Congress that performed way better than the S&P 500 that happened to have a return of 24%. And even though we haven't seen the full results of 2024, we do know that the Pelosi's managed to beat the S&P 500's 23% return by more than double. I think we all know that politicians can directly impact the business world with their legislation and laws. And I believe that many of us assume that a lot of politicians have an inside track to information before it goes public, potentially giving them a lead on the best investments. Granted, politicians are required to report their stock trades within 45 days of the transaction due to the Stock Act, but a lot can happen in 45 days. Nonetheless, what they buy and sell can be very telling about what some of the best investors in Congress are expecting in the market. And after studying Congress members' investments for the past year, here are my cliff notes on just a few of them. Everyone knows that Nancy Pelosi and her husband have been crushing the returns on their investments. However, in 2024, they only made 10 trades, where they mostly bought Nvidia, Broadcom, and Palo Alto Networks. The Pelosi's held onto their investments for 2024 to simply ride out the market. And then we have Rick Scott, who I believe is the wealthiest member of Congress with a net worth well over $500 million, and whose trading activity in 2024 was extremely boring. Let's face it, he is well past the retirement age, and he has a lot of money. So all he's really doing is safeguarding what he already has by investing primarily in municipal bonds, which are a relatively safe investment with the benefit of having tax savings, which I have covered extensively in this video right over here. And then we have Josh Gottheimer, who was a trading beast in 2024, where he had over 500 trades with a volume over $67 million. And he is quickly building his wealth really from two main areas. The first is in his choices of some of the top companies, but he also does a lot of call options trading. And this is also something that I recently covered with Options Trading Basics, which you may want to watch so that you'll learn a little bit more. So in today's video, I'll cover the top stock Congress bought over the past 60 days. And in keeping with my normal process, I don't want you to have to wait for each stock that I cover. And I hope that you can appreciate my upfront approach so that maybe I can earn a like and subscribe by the end of this video. So let's get started with some of Congress's top picks over the past few weeks. And I'll start off by stating that several members of Congress bought Microsoft, adding up to over $15 million worth of stock, which we all know is a huge company that we also would have expected to see a little bit more gains after their launch of their Copilot within their Office suite. But the stock for the past 30 days is down -5%. And the past 1 year, it's only up 12.99%. It didn't even keep up with the S&P 500 last year, so it was a little bit of a letdown. But analysts are giving it a bit more love this year with the potential for an average expected upside of over 18%. Now, I have to agree that their pick of Microsoft is a solid choice, especially since the S&P 500 forecast for the next year is expected to only be at 13%. And as a little bit of a backstory, Microsoft happens to be dropping their support to older versions of Windows, and it's forcing customers to upgrade their hardware and their software. So I do see Microsoft doing a little bit better this year. Now, there is one sector that I was surprised that didn't make Congress's list, and that's mining. And I bring that up because last year, gold was up over 33%, and it's less volatile than the markets. And another key ore is copper, which is needed in everything, from home wiring, electrical motors, and especially electric vehicles, where the number of EVs is estimated to nearly triple in the next 5 years. And if you aren't aware, these vehicles use 4 times more copper than traditional cars. And that's where today's sponsor, US Gold Corporation, comes into play, where you shouldn't let the name fool you, because they have a CK project in Wyoming that has significant gold and copper deposits. And this copper is not only used in EVs, but it's also critical to other clean energy producers like wind and solar. And that shows in the stock price for US Gold, where it's already up 16% year to date and over 90% for the past year. And analysts project the stock to be up over 60% for the next 12 months. Not only is gold a great haven during market challenges and a hedge against inflation, but the demand for copper gives US Gold Corporation a strong growth trajectory. If you're interested in learning more about US Gold Corporation, then check out the links down in the description. And next we have Arrow Electronics, which offers data center, cloud computing, and cybersecurity tools and software. They also design and prototype new technologies for companies. Okay, now this stock is one that I'm not very familiar with, and I'm very curious why members of Congress happen to be buying this one now. Because when you look at the profit margin, it's been dropping, and the debt to assets is high. And the one upside is beating estimates in the lower right. And then analysts only give this a whopping 10% upside. But I did notice that the analyst from Goldman Sachs gave it an upside of 16%. So unless they're about to get some huge government contract with huge margin boosts, this one just isn't for my money. There happen to be a lot of other companies that I would much rather choose to invest in. Now, the next company is AppLovin, which everyone knows is my favorite chance to mention McLovin.
Number two, it doesn't even have a first name. It just says McLovin.
But seriously, AppLovin is a tech company used for mobile advertising, app development, and publishing, as well as machine learning-based marketing. It has been riding the AI wave this past year, where it has been a total cash cow for me and several other investors. But analysts think that the party is starting to slow down with a 0% upside for the year. But this is one that I think the analysts might have this a little wrong. And the reason I say that is because when I look at the quarterly earnings, they have figured it out with their revenue and their margin. And I'm guessing that Q4 is probably going to be stellar for them due to the simple fact that in the basics of marketing, everyone starts spending in Q4. And that should give them some solid momentum going into 2025. For that reason, I agree with Congress on this particular pick, even though analysts are a little bit less sure. The next company is D.R. Horton, which is one of the largest home builders in the US, operating in over 30 states. Now, I have to say that this pick made me very curious because as I study the housing market, it's very complicated right now. The Fed is slowly dropping interest rates, but mortgage rates aren't really changing. Instead, they're still quite high, especially from where they were 4 years ago. And for most markets, the inventory levels are very low because people are trapped with their very low mortgage rates. And nobody wants to move or buy a house where the interest rate may double from what they already have, which makes new homes one of the few options available for people that need a home for the first time, or if they happen to be moving to a new city. In reviewing the housing situation, new homes will continue to be hot for this entire year, and maybe even next year too. Now, when we look at their financials, I was impressed with the revenue and the margins. Granted, the past 2 years, the margin dropped due to offering incentives, but the debt to assets in the upper right is incredible. And the cash flow from operations is also very good in the lower left. But unfortunately, the earnings forecast had a couple of misses in the lower right. And an equally high surprise was the analyst forecast having nearly 35% upside. And one Bank of America analyst has them with over 100% upside. Overall, this was a bit of a shock for me. But in researching it, I feel that it might be a good investment for myself. Let's move on to the next company of Fortinet, which is a cybersecurity company that's been around for almost 25 years, where they offer a lot of the same threat detection and security for companies you might be familiar with, like CrowdStrike. And given that CrowdStrike had its major issues last year causing major airline outages, it may have opened the door for competitors like Fortinet. The revenue and margin has been doing great the past few quarters, but their debt to assets is quite high. But they've also been consistently beating their earnings per share estimates. And in the forecast, they are rated fairly low with only about a 4% upside. But there are two analysts, one from Goldman Sachs and another from Morgan Stanley, that has them up about 18%. And I believe that they're a little bit closer to reality when you look at the fundamentals and how they've been performing. I'm also tracking in the back of my mind that cybersecurity should have a lot more legislation tied to it. And this is an area that Congress should have some firsthand knowledge on. But hey, we'll find out together. Moving on to the next company of Dominion Energy, which is a major utility company providing electricity from many different sources, including nuclear energy. They also transport and distribute natural gas, and they have a large ownership in renewable energy. Recently, they have gained a lot of press around their support to major companies like Amazon, Microsoft, and Google for their data center needs on the East Coast. Dominion is only up 16% in the past year, but the PDE ratio is sort of low at a 19.5, and they have a healthy dividend at 4.88%. And their revenue and margins look good. All around, their financials are solid, which is exactly what I would expect from a high-paying dividend company that's been around for a while. However, the forecasts are only okay at about a 10% upside, and the analysts don't see much more room beyond that. I recognize that this company does have a partnership with Amazon to seek out small modular reactors in Virginia for their nuclear energy, but that won't have a payoff for another 3 to 5 years. So if Congress knows something that we don't, then maybe this is a good investment. But for my money, based on what I know, I'm going to pass on this one for now. So when we look at the complete list of companies and whether or not I would consider investing in them, overall, Congress is making some pretty decent choices. And there's a few that I simply wouldn't invest in. Well, at least not with the public information that I have available today. But I am curious to see how these are going to fare over the next couple of months. Thanks so much for watching.